Let's take a look at my $19,000 portfolio and see how much it paid me in the month of May. Now, as you can see, the actual value of the portfolio right now is at $18,915. And then on the right hand side, you can see all the stocks that I currently own. If you saw my previous portfolio video, you saw that I had some options which they expired worthless. Pretty much I kept my premium. I didn't get assigned any stocks, and I'm going to be buying more stocks in a new video that I'm going to upload later this week. But if we take a look at the past week, we are up almost 0.5%, which is about $108. And in the past month, we're up 0.16, which is only about $29. However, we take a look at the overall portfolio comparing year to date, we are up 8.99%, which is about $1,559. Now, the portfolio value does say 18,000, but if you can see, I have about $5,000 in cash. So right now we're going to take a look what I actually have invested and what is paying me in dividends, because most of the stocks that I do have is because they do pay me dividends. So let's get into that right now. Now, from the total of the 18,000, about 13,000 of that is invested, and I have a yield on cost of 3.48% on my portfolio, which gives me about $454 in annual income. And as you can see, my portfolio beta is 0.81, which basically means I don't have a very volatile portfolio, which is what I am looking for. Now, I want to highlight real quick these two ETFs that I have right here, which is most of where my money is invested. I've said it plenty of times before in the video, I don't consider myself to be able to beat the S&P 500 every single year. Can I do it for a year, 2-3 years? Yes. For example, if I go on the old time of my portfolio, I am up 14%, and the S&P 500 pays out about 8% on average every year, but that is for the past, I don't know, 100-200 years, and I've been doing this for no more than 6. So can I do that for 50 more years? I'm really not sure. That's why I'm switching my portfolio a little bit over to ETFs, especially SCHD, because I want some consistent income on a monthly basis, and then SCHG, I just want to have a large cap growth ETF. I don't have the S&P 500 ETF because I have another account on my Roth IRA, which I invest only on the S&P 500 and a small cap stocks. So I have these two since they're different to be a little bit diversified. Apart from those two stocks, most of my money is invested between Google, PepsiCo, and Pfizer. I think these are three great companies. I think I got them at a decent price. It's nothing too crazy. For example, I managed to buy Google at $150 per share. I think this stock is easily about $200 stock. Right now it's currently at 171. I bought PepsiCo at an average cost of 133. Right now it's 131. If it falls below the 130 mark, which it has been doing throughout the weeks, I plan on buying maybe one share or two. And PepsiCo, my average cost is, Pfizer, my average cost is 29, which is a little high. The stock is currently at $23, but this is a huge company. It's one of the biggest pharmaceutical companies, and I do see them turning this around. Hopefully I'm not wrong. Let's see what the future plans, but I am down currently $331. So let's see what happens with that stock. Then I've invested a little bit in United Healthcare. My average cost is $326. The current price for the stock is $301. Now, this company has had a lot of bad things happen to them, okay? Anything you can think of a company, between lawsuits, CEOs being assassinated, anything that could possibly happen is happening to this company. However, the insiders are buying. And usually when that happens is because they expect something good to happen with the company, or they expect to turn around the current situation they're in. That's why I have a small position in United Health Group. And not only that, this is the biggest company in the healthcare sector, so I'm willing to take the risk. Then we have UPS. My average cost is $98. It's currently at $97. And I have VG Properties. This is just somewhere to allocate my money. This is in a stock that moves a lot. It's just gonna be paying me some annual dividends. As you can see, per year it'll give me about $51 in dividends. I'm hoping to try and get this stock to 100 shares, so I not only get the annual dividend, but I also get some income selling calls. It is the plan. However, I don't just want to dump the money right now and buy the stock at $31. I think Vici, if it goes to like the $27 mark, which is going to be very hard for it to do, I think that's where I'm going to be dumping most of my money. But as you can see, it definitely pays me a lot of dividend. Obviously SCHD and Pfizer are the ones that pay me the most, along with PepsiCo as well. Now, if we go back to my portfolio and we take a quick look at the companies that I am taking a look at, When the market opens on Monday, which is today, the time that I'm recording this video, I'm gonna see how SoFi and NU are performing. And then on Tuesday, I'm gonna record a video either selling puts or buying some calls, depending on what I think the stock is gonna do. So be on the lookout for that. And a new position that I am planning to open on my portfolio is gonna be ASML. This is a company that I bought around 600 and something, and then it went up over the 700 mark. I decided to sell it because I was happy with what I made. But I mean, this company, the insiders are buying the stock like crazy. The stock is down from $1,022 to right now, which is currently at 735. So you have some room from growth. I took a look at some metrics at the intrinsic value. Everything looks well on the stock. It's a monopoly, has very few competition. It pays you a dividend yield. So I think this is going to be a stock worth investing for me. And then lastly, another stock that I plan on buying. I mean, AMD has been increasing its earnings and their stock price pretty much has been still down or remained the same. And I think it's a very good company. The only downside is it doesn't pay you a dividend yield. I was gonna buy it when it was at around $97 mark. I didn't, so I feel like sort of I missed the boat on this. But then I look at the overall chart, and I mean, man, look at the highs. It was 192. You can get it for 110 right now, so that's great upside. It's in the AI race. It's in the chip making race. I mean, it's where it has to be for a company to grow. So between this company and ASML is what I'm going to be looking to buy in a future video. So if you enjoyed the video, please consider leaving a like. Don't forget to subscribe, and as always, I'll see you on the next video.